Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SEADRILL LTD quarterly report. SEADRILL Limited offers a range of offshore drilling services to the global oil and gas industry. These include offshore drilling services for shallow and ultra-deep water operations in benign and harsh environment services provided to plus oil supermajors, plus state-owned national oil companies, plus independent oil and gas companies. The stock price of SEADRILL Limited has dropped by over 27.7% in the past year due to a combination of operational difficulties, unfavorable financial results, and legal challenges. The company's poor performance was evident in its quarterly earnings reports, which showed significant declines in revenue and net income. In Q1 2025, SEADRILL reported a net loss of $14 million, while in Q2 2025, it reported a net loss of $42 million. The third quarter saw a net loss of $11 million. Operational difficulties, including expected impacts on EBITDA and legal challenges, such as penalties imposed by Norwegian courts and Petrobras, also contributed to the decline. Analysts' price target revisions from $54 to $28 further reflected the market's cautious outlook due to fluctuating oil prices and demand for offshore drilling services. The company's financial weakness was highlighted in its 9-month comparison for 2025, which showed a decrease in operating revenues, a substantial drop in operating profit, and a swing from net income to a loss year-over-year. High debt levels and lower profit margins also added to the company's financial challenges. The primary drivers of revenue growth or decline for the company can be attributed to several key factors. On the growth side, an increase in average contractual day rate and higher management fees on certain rigs have contributed to a significant boost in contract revenues. Additionally, Brazil has emerged as a major revenue driver, with growth rates of 93% and 75%. On the decline side, reimbursable revenues have seen a substantial decrease due to a reduction in services provided. Leasing revenues have also declined due to chartering rigs to Gulfdrill. Furthermore, revenue declines have been observed in Angola and Norway, with Petrobras' market share decreasing from 38% to 17%. Net income and profit margins, a tale of two trends. The financial performance of a company underwent significant changes between two periods. Initially, net income increased from $60 million to $253 million, indicating a substantial growth in profitability. However, this trend reversed, with a decline of $412 million, minus 119%, to minus $67 million. The decrease was attributed to various factors, including changes in operating income and interest expense, as well as increases in depreciation and amortization, management contract expenses. Profit margins were also affected by these same factors, resulting in a negative impact on the company's overall profitability. The increase in depreciation and amortization due to capital projects and unfavorable contracts, along with higher management contract expenses stemming from an unfavorable court judgment, contributed to the decline in profit margins. These changes highlight the importance of monitoring financial performance and addressing underlying issues to maintain stability and growth. The company's financial performance indicates a strong ability to generate cash from its core operations. With a net cash provided by operating activities of $12 million for the 9 months ending September 30, 2025, it is clear that the company is generating positive operating cash flow. This suggests that the company's business model is profitable and capable of producing sufficient cash to meet its financial obligations. The company's financial health remains stable with no significant changes in its debt level and interest expenses. According to the extracted summaries, the total principal debt has remained relatively stable, increasing from $625 million to $612 million over the past year. Similarly, interest expenses have decreased by only 2% from $46 million in 2024 to $45 million in 2025, indicating a minimal change. These results suggest that the company's financial position remains unchanged, with no notable fluctuations in debt or interest expenses. Management's outlook on company strategy. The company is optimistic about its future prospects, citing supportive oil prices for offshore exploration and development. To maintain a strong financial position, management plans to prioritize a conservative capital structure and liquidity, focusing on fleet investment and returns to shareholders. Key highlights of the strategy include maintaining net leverage below 1.0x under current market conditions, keeping at least $250 million in cash on hand, and returning at least 50% of free cash flow to shareholders through share repurchases or dividends. This approach aims to ensure a stable financial foundation while also delivering value to investors. The company has a history of buying back shares. In 2024, they completed a $292 million share repurchase program, purchasing 6.7 million shares. Although the authorized amount was $500 million, only $208 million remains available for future purchases as of September 30, 2025. That concludes the financial summary for SEADRILL LTD. Feel free to comment below, and I will be happy to answer them when possible.